Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwago. Today on the show, World Bank sees Nigerian 2018 GDP growth at under 2%. Tanzania Central Bank suspends 5 banks from interbank FX market. Plus, British Development Finance Agency CDC Group to invest up to $4.5 billion in Africa over the next 4 years. Let's get the show started now. And starting off here in Africa, it's a mixed sentiments at intraday for some of the major exchanges on the continent. The Nigerian Stock Exchange and the South African JSE Index were trending bearish at intraday, shedding 0.41% and 0.54% each, while the bulls held sway in Egypt at intraday with the main index coming in stronger at 0.19%. The Kenyan Stock Exchange also closed trade in the positive territory on Wednesday, gaining 0.40%. And the mixed sentiments extended to the Middle East, with the Qatar and Saudi stocks rallying at intraday, coming in firmer by 0.34% and 0.12%. On the other hand, sell-offs hit stocks in Abu Dhabi, causing a massive 2.27% share-off on the index. Dubai financial market equities also plunged by 0.61% at intraday. And in Europe, stocks opened higher after a key speech by Federal Reserve Chair Jerome Powell. For reactions and other developments in the European space, Ulrich Babs joins me now. Hello, Ulrich. Good afternoon. Good to see you again today.
Hi. Good to see you.
Right. The UK Prime Minister Theresa May, the opposition and the Bank of England in war of words over orderly or disorderly Brexit and scenarios of consequences. What is the morning after looking like on the stock market ticker tips?
Well, the morning after is offering a surprising picture. There is no devastation in the market after these devastating numbers and statements coming from the British government and the Bank of England. The Bank of England forecasting a 25% drop in the British pound, which would have huge consequences for the economy, especially for the consumers, and for any import things that, let's say, industry had to import, machinery. And the government, in its worst-case scenario, predicting a loss of some 200 billion pounds per year in the next 10 to 15 years. But the markets are taking it quite moderately. The FTSE, indeed, stock market barometer for London is going up as we speak, about 0.5%. And the pound, yes, that's losing a little bit, just shy of 0.5% to the euro and the dollar, but one could have imagined bigger losses after news like that.
Now, in the U.S., the body language of the Fed is suggesting a slower speed of rate cuts in 2019. What is the likely response from the ECB and the financial markets?
Well, the ECB might see itself under a little bit less pressure to reduce stimulus if the Fed doesn't raise rates quite as quickly as it had scheduled, as it had indicated in the recent past. And the ECB might need more leeway, might need more elbow room on financial stimulus with a financial crisis brewing in Italy. It's not there yet, but a lot of people see problems with the debt load that the government is pushing ahead of itself, with the kind of deficit, with the kind of spat it's having with the EU Commission, and especially with the state of Italian banks, who are both creditors to the government and also have a lot of bad loans on their books. But the market is looking pretty good at the moment. The DAX nowhere near the buying spree that we saw on Wall Street. The DAX actually, now it lost most of its gains. It's still going up by about 0.2%. France is looking quite good, but Milan only just holding on to the previous day's levels.
All right, let's look at some corporate news. The Unilever CEO, Paul Pullman, is stepping down. That's on January 1, 2019. Now, this looks like an orderly change of baton but how is the market reacting to this news?
Well, the market is shedding a tear because they think, obviously, that The outgoing CEO did a splendid job, and that's what Unilever itself is saying also after his long reign at the top. He did have one issue which did not go his way, trying to consolidate the headquarters. It was split in two between the Netherlands and Great Britain. The British side, the British shareholders, rejecting the effort to consolidate. But still, he's looking back on good years. And the market is going down. The Unilever share is losing about 0.8%.
All right, thank you for your time, Ulrich, and enjoy the rest of the day.